Hello, everyone. Welcome to a new episode of Baiguan Radio. Last time, Johnny and we talked about the issue of RMB appreciation, and I'm sure many of you have listened to his rationale of why appreciation may not be the right path right now. Today, I'm joined by another friend, Joao, who will share some different views with us. So Joao is a macro investor. He's a portfolio manager at Absolute Investments, which is Brazil's largest hedge fund with $11 billion in AUM. Joao lives in São Paulo, Brazil, but has lived for many years in Asia, mostly in Singapore, but also Shanghai, which is his favorite city. Hi, Joao. Would you say hello to our audience first?
Hi, Robert. Thank you for the invitation. And it's a pleasure to be here. I've been reading your Substack for a long time, and it has helped me a lot in these times of changes in China.
Thank you. So how about let's dive right into this topic today. A lot of people are talking about that, debating about that. But I think it's important to point out the facts at this moment. At the beginning of the year, people were projecting for RMB to go down in value, to depreciate, because there was a lot of these concerns about economy in China and also U.S.-China trade tension. So surprisingly, a little bit, for the last few months, the RMB are actually appreciating, right? So it does create some kind of surprise over there. So I know you hold a quite strong view about the trajectory of RMB, and you don't, we chatted privately. You don't seem to be agreeing much with our last episode on the same topic. So I would really love to, for you to share your view, not just for me, but for everyone who are listening.
Yeah, I listened to the previous episodes, and Johnny has a lot of experience. We can both be right depending on the time horizon. I'm just an observer, and I think he mentions larger appreciation, right? You sometimes even he talks about 50%. I'm talking about something the beginning of a move, and then we will find out how much it can go. So I'm more interested now in the direction and the time. So I think that to start, I think most people can agree that China is very cheap. So when I first moved to China in the beginning of the 2010s, China was very, very cheap. And when I go to China now, I think it's equally cheap if you adjust for the quality of goods. I mean, China in 2010 was not the most sophisticated place. Now you go, the quality of the products, services is amazing, and the price is very low. So I think we can agree that China is very cheap, so the price seems to be a bit wrong. If you look in numbers, if you look at the price level in China compared to its trade partners, it's around 15% lower than it was just 5 years ago before COVID arrived. And how does that happen? It's simple. In the past 5-6 years, China didn't really have inflation, while most trade partners had 2, 3, 4, 5 inflation per year, percentage inflation per year. So if you add 4 or 5 years, 3%, you have the 15% I mentioned. So that's why if you compare China with other capitals, it looks very, very cheap. And if you think about this number, the 50% lower, it means that the price level in China now is comparable to 30 years ago in the mid 1990s. And if you think that the productivity in China has been much larger than its trade partners, it means that things are even cheaper. And that explains what people experience when they arrive in Shanghai, for example, or any other city, that things are very good and very cheap. So I think this is the first point. I think most of us can agree that the prices, the level is very low.
Yep.
The second point is one important thing for financial flows is the level of interest rates. And interest rates in China are not high, but because you don't have inflation, you have what people call high real interest rates. So you have 1.5% interest rates in China with zero inflation. So that compares, let's say, with Japan. Japan has a equally cheap currency. Everyone that goes to Japan can agree that Japan is cheap. But for financial flows, it's the opposite from China. Because if you go to Japan, you have inflation is 1.5% higher than interest rates, while China is interest rates is 1.5% higher than inflation. The third variable for capital flows would be growth. Growth is going to be decent in China. It's not going to be amazing, but it's not going to be a problem. So I think this is a neutral one. There is a particular story here as well, which matters for our discussion, which is the dynamic of the exporters. The biggest strength in China, it's the trade surplus now in terms of currency, right? But the thing is, a lot of exporters were not converting their surpluses into RMB. So let's say you have $2.5 trillion per year of exports and 2.5 trillion per year in imports. So you have a surplus of $1 trillion, right? Yes, but if, let's say, half of the exporters don't bring their money back to China, you actually have a deficit. And why weren't these exporters bringing back their money? Many reasons. Maybe they don't have growth onshore, so they don't need to bring the money back. But a lot of they are expanding offshore, right? Which we know it's true. They're building plants outside China, which makes a lot of sense. But also it means that they think it's better to keep their cash in dollars, earning 4 or 5% rather, or even in Hong Kong, right? Rather than converting them to RMB. This has been a problem for the balance of payments in China, right? In terms of capital flows, we know that since the 2022 war in Ukraine, China has suffered in terms of inflow from foreigners. A lot of investors are not willing to invest in China. So this is the picture, right? So this is true now. It was true 1 year ago, and it was true 2 years ago, let's say, more or less. So the question is why I think it's moving now, and it's becoming more and more consensus, right? But it's interesting to explain. The first thing is the hint from the PBOC. The PBOC has been trending lower the fixing since May in a very consistent manner, and we know that these things in China, they don't happen by coincidence, right? So you ask yourself, why are they doing that, right? And they have kept this trends despite variations in the US dollar, right? And that means also that the RMB has been appreciating against other currencies, not only the US dollar in the past couple of months. And with that, since you see the PBOC moving lower, we are not the only ones realizing that the PBOC wants a slightly stronger currency. The same exporters that we talked about just now, they realize that. So they do the math now, right? They say, well, I can make 4% in dollars, or I can make, let's say, 1.5 in yuan. But if my currency appreciates 3%, it's going to be the same. It's going to be the same. And I will not have the currency risk if I keep it in RMB. So you can already see the psychology change. So now that we observed some of these dynamics of appreciation, we have to ask ourselves, why is the leadership interested in appreciating the currency now? And there are a couple of things. Like, first of all, we have to remember that the RMB internationalization is a long-term desire. And I think it's one that has been even more in the forefront since the war in Ukraine, right? So this has always been objective. I remember in the early 2010s, it was even higher on objective. And because of the strong dollar, the PBOC had to change their plans. So in some sorts, we are 15 years later, we are back to the same point. And it's not a coincidence because we had 15 years of a strong dollar. And when you have a strong dollar, a lot of things are very difficult for other countries in the world. And it's not just China, even Brazil, where I come from. So the first point for appreciation would be the RMB internationalization. A second point, people talk about the margins in China, and the companies have low margins. And it's true. But we have to remember, first, that the PBOC and the leadership in China will not do any crazy move, right? They will not appreciate the currency out of the blue. So on top of that, what we have to remember is that in China, it seems to me that the government never wants the companies to feel too comfortable. and the cheap the cheap currency is some sort of hidden subsidy, right? And I remember when I moved to China in the early 2010s, China was making a big effort to raise wages in the manufacturing sector. And I remember back then that the whole discussion was, will China be able to move up the value chain? Because the discussion back then was, well, China is not able to create a brand. We don't have a brand. Can we do this move, right? Can we move higher? And 15 years later, we know that that's true, right? You have amazing global Chinese brands. And I think we are going to live now a similar moment. I think that it goes hand in hand with the leadership desire to move to high quality production. And I think it was very clear for a lot of private companies in China during the tariff, the worst periods of the tariffs in April, May, that they had very low margins. And they realized that why don't they have their own brands? And we saw a couple of videos in the social media, both in the Chinese social media and the Western social media of producers in Dongguan, in Shenzhen or whatever. They are saying, look, I produce this bag, it costs $300. And you in the West, you pay $1,500. So I think some of these companies will be able to move up the value chain. So I think it matches both sides, both the leadership and the private companies to go for higher margins. And I think the currency makes the companies a little bit uncomfortable and creates the incentives for them to do that. The third point for appreciation is diplomacy. I think that the cheap RMB creates a huge surplus. And we know that that's a problem for a lot of trade partners. And if China starts appreciating the currency, the trade partners will notice. And I think this will help China with a lot of non-economical issues that they have to deal with, especially US and Europe, right? So I'm not saying that this is right or wrong. I'm just trying to understand what's going to happen. As an investor, I want to know why they're doing that and how much it can go. The final reason or why I think it makes sense for the leadership to move now is that the meeting in Seoul between the two leaders was very good. We know that for 1 year, there seems to be a plan that there won't be a lot of volatility. We should expect stability in the relationship. And it makes sense because China wants to move on semiconductors. US wants to move on rare earths. The US has the elections in the end of next year. So I think in terms of the leadership, everyone's happy. Maybe people who are below the leadership are not so happy, but that's a different subject. So I think for China, knowing that you're going to have a year of lower volatility between the two countries is also a good window to try to make a move into a stronger currency. Because think about it, it's different when you try to make a move on a stronger currency, and then 3 months later, the US raises tariffs, and then your manufacturing base is they will be quite unhappy. So I think it's a good win, and I think it's very typical of the Chinese way of doing policy, that they take advantage of windows and do trial and error. So I think this explains the timing, right? That's the timing. So first we agree that it's cheap. Then we agreed. Now I don't know if we agree, but there are reasons for the timing. And third, the whole discussion is how much can it go. Yeah, right? I think that more interesting than the end game is how much they're willing to do in the short term, especially for us investors. The first thing that I would like to point out is that the whole inflation differential story that I explained earlier, it's worth more or less 1 point in the dollar CNY exchange rate. What does that mean? It means that if you think that dollar CNY was 7.0 before COVID, that same level of 7.0 before COVID is 6.0 now.
Oh.
So if you say, let's say, is it possible that dollar CNY goes to 6.0 in, let's say, 1 year or 2 years? I can say, well, it's totally possible, because it will be at the same value if you adjust by inflation as it was 2019. In 2019, things were okay in China. Then of course you can say the tariffs are higher now. This has changed that, but I'm just trying to give you order of magnitude, right? Uh, but I don't think it's gonna go to 6.0 in 1 year. The point is, it makes sense that the PBOC will move slowly, but they have space to go. So I think that if you have especially if you have a slightly weaker dollar or stable dollar, I think we can go to 6.5 in 1 year, in the end of of uh, of next year. So this is how much I think it could go, and then we'll see from there what happens.
Yes. So it seems to me that you are not like overly aggressive about this. You're just seeing there's some way to go, and it does seems to be some kind of incremental change from where we are right now. Do you think these small number will have big impact down the road? How do you see the final implication of this? Well, what's your take on the long-term trajectory?
Yeah, so I think that small numbers make a big difference. So the first point, just what I mentioned earlier, is because the company's margins are quite low. A small move in the currency will make them be a bit uncomfortable and probably try to move up the value chain. So I think this could have a big impact in terms of Chinese companies having higher margins. Okay, so this is the first point. And I think this will have much larger impact for the trade partners, actually, because what I often say is that the Chinese trajectory regarding its trade partners has been that first China was a supplier. Everyone was happy to produce in China. Then China became a client. People were even happier because they would produce in China, but also sell in China. But then China became a competitor. So at that point, their sales go down. So I think this will happen, will intensify, because when these small changes make these companies move up the value chain, they increase their margins, they're gonna have better brands and they're gonna be better competitors. So this will be a problem for foreign competitors. So this is the first point. Secondly, and I think it's very, very, very important, it's confidence. So I think that these things are exchange rates are very there's a lot of psychology around them, and I think the fact that the CNY will move below 7 soon and will not move above 8 like a lot of people thought, it creates news headlines and the discussion changes. People start to realize that it's cheap, that it can appreciate. So the whole discussion moves.
You mean the headline number 678? These will change the people's perception completely, change the dynamics of the narratives.
Yes, and one thing that happened that was very clear in the first semester is that when the tariff war started, the tariffs in April started, everyone thought that the Chinese RMB would go to say 8. And all of the Asian partners were scared of that. And after 1 or 2 months, that didn't happen. And they realized that the Chinese would not do that. They didn't want to do that. That changed a lot of gave a lot of peace of mind to the Japanese, the Koreans, the Southeast Asians, even the Europeans, right? So these things, they do matter, right? Not only for China, but for the trade partners. So I think that a stronger currency makes a big difference. Secondly, it will give confidence to the local investors and people in China, right? Because if you are used to the idea that the currency only gets weaker, and then you think that one day it can go to 8 and maybe 10, and then if it goes to 7, it changes your perception, right? And let's remind ourselves that this year, 2025, was a big year of changes in perceptions in China, right? In the beginning of the year, the DeepSeek moment was big. I'm Brazilian, so I said that when the feeling in China when DeepSeek came, it was a little bit like if Brazil wins the World Cup again. You remind yourself that you're good at that, right? You remind yourself, oh, actually, I'm very good at this. I'm very good at that. So it's good for confidence. So, and this year you had a lot of that, right? You had DeepSeek, you had the Labubu story, you had the Neja movie coming again. So I think it's a big year for confidence, and I think the currency is just another piece on that. More broadly, and I think this is a larger subject. Ever since I started dealing with Asia, and when I lived in Asia, everyone talked about China GDP being higher than the US, right? The population is 4 times larger, right? And in the last 5 years, no one talks about that anymore. Why? Because the Chinese currency is weaker and the US GDP is very strong.
Yes.
If the Chinese currency starts to appreciate, let's say 3-5% per year, even if you use the current expectations for growth, which are quite good for both China and the US, so we don't have to do anything crazy. That means that the Chinese GDP will be larger than the US between 2030 and 2035, somewhere around that. And that has a lot of implications. When China's GDP was 1/3 of the US, China was not a subject in the US. It was not a problem. When China became half or 2/3, which it is now, of the US GDP, it became a problem, right? So this is a thing that will have a lot of consequences because the Chinese GDP will be very large, and the same way that the psychology is important for RMB going below 7, the psychology is also very important when the Chinese GDP crosses the US GDP. So, and this is a deeper subject, but I think it's something to keep in mind because our listeners, they haven't heard people talking about that in the last 5 years, but in the previous 15 years, this was all about people talked about.
Yeah. So kind of the narrative may be coming back now, finally.
Yes.
Yeah. There's another school of thought recently. I think you've read Mr. Shan Weijian, the executive chairman, legendary private equity guy in China of PAG. He wrote, I think, in Financial Times, an opinion piece, also advocating for appreciation of RMB. And I think he was pretty aggressive for that. He was like imagining something like 50% appreciation or something. And he cited two benefits for that. One, you cover that, which is a better trade balance between China and trading partners, so better international environment. But then there's also the second point that he thought that a stronger RMB would help to boost domestic consumption significantly. But then I know that many people found this idea quite problematic, right? How can consumption just be boosted automatically if you have a stronger currency, given that a lot of the products and services that people buy now are domestically, right? So what's your take on that? Do you think a stronger currency can help China to boost domestic consumption as well?
Yeah, I have a deep respect for Wei Jiangshan. His book out in the Gobi is amazing, amazing. It's I think it's a must read for everyone. So yeah, I mean, I think we are thinking in the same direction. Maybe as a hedge fund person, I'm thinking 1 year, and maybe he is a private equity person. He's thinking maybe 10 years. So maybe if you add 5% per year for 10 years, you would get to his 50%. Maybe that's the difference. So I think that if you talk about the RMB and consumption, I think the RMB appreciation goes in hands with the leadership decision to improve consumption, right? Especially what they call the high quality consumption. In the same way that I mentioned earlier, the high quality production, right? And both of them go together with the whole dual circulation story, right? So that gives me more confidence on this idea because it's aligned with the long-term interest. Normally, a big difference in terms of currency impacting consumption would be in the goods consumption. But in China, the problem in consumption is not the goods consumption. But I'll get to that point in a second. I think that if China is able to increase its profit margins, it would also be able to increase the salaries. And I think this is where the government is thinking about, right? You have higher margins, you are able to increase your salary, you have a larger middle class, right? Now it's very hard to increase salaries if you have such low margins. Indirectly, it would take you to the same objective. If you look at consumption in China now, I don't think RMB in practice will be the main driver. The biggest problem in China, if you take the overall consumption, if you look at goods consumption compared to its peers, in China it's the same. It's very similar. It's a car, a TV, a phone. It's very similar if you look at the levels in terms of goods consumption, in terms of GDP. Also, if you look at income as a percentage of GDP, it's also more or less in line with its peers. The problem in China now, at least from my point of view, is that a lot of the income is saved. There's very high savings, and especially high now after the last 5 years. So you have what they call the high precautionary savings. So this is one point. So you have less money to spend because you're saving. And the other issue is the low service consumption, right? So people in China, they make money as they should, and they spend on goods as they should, but they save and they don't spend on services. One of the reasons of the high precautionary savings is because of, the economy has slowed down, and when the economy was very strong, you didn't really have a lot of, let's say, welfare rules or job market rules for fair treatment, because the economy was so strong that if you lost a job, you would get another job elsewhere. But now that China is experiencing a more, let's say, normal, type of growth, the job market, for example, is different. So it would make sense for China to create some rules around the job market. And they seem to be doing that. You have more, we talk about the 996, we talk about the expectations that people after 35, they get fired. These things seem to be changing, and they should reduce the precautionary savings because you don't have to save as much if you don't think you're going to be dismissed. The other point is the service consumption. And this is very clear. I learned a lot about that with your Substack. The government is trying, right? They don't know how exactly to do it, but it's all about service consumption now. Especially sports is quite interesting to see what's happening. So I think this is...
So basically, your point is this RMB...
It's not really related to...
Yeah, that's not related. It doesn't move the needle for these main problems.
Right. Exactly. And got it. And also, if you look at the latest 5-year plan, even though consumption is one of the goals, it's not the main goal. So I think that what will happen is that currently the biggest goal by far is the autonomy on technology and autonomy in access to commodities and all of these things, right? So it's autonomy. And consumption, it's a priority, but it's a secondary priority, let's say. I think that economy, there are cycles, right? Maybe in a couple of years, you're going to have a US recession, which is normal. It's totally normal. Every economy has recessions. Maybe when we have that, let's say in a couple of years, and the global GDP is lower, maybe consumption in China will grow to become a first priority, like we experienced in 2009-10, but much less extreme, of course. So I think this is more or less their plan, right?
Yeah. So I think I have one final question for you. You are an investor. If you don't mind, would you want to share with us a bit about, if the assumption is RMB is appreciating right now, what assets or what China-related assets you will pay the most attention to?
Yeah. So I think the first thing is that if it's true that China-US relations are stable for 1 year, this is very good for the whole world. It's a healthy competition. Another thing is that it's the first year that we're going to have quite balanced growth everywhere in the world. The US is going to grow decently with lower rates. China is growing also decently, although I think the first quarter is going to be more complicated. The rest of the world is growing more. So I think that it's going to be a good year for global growth. So this is the first point. And if you think about the Chinese investments, I think that equities are still interesting for the medium term in China. And you've mentioned in your Substack many of the reasons. I don't need to repeat all of them. I think, as I mentioned earlier, I think the beginning of the year, I think the growth can slow down more than expected.
You mean China?
Short term, but yeah, I think so. But I think that the whole narrative that we are talking about, stronger currency, better global growth, this is very good for Chinese equities as well. So I think this is the one point. I think when investors realize that CNY is not going to go to 8, but actually might go to 6.5 or 6, I think you take out a tail risk of a Chinese one. I remember meeting one fund manager, a Chinese fund manager, that he always did his models using 8 on dollar CNY because he feared that it would go to 8. So he wanted to know. Okay. So these things, they matter, right? So I think for equities, it's quite good. If we talk about higher margins for Chinese companies, it's also quite good for equities, right? Because the problem in China now is that you have lower margins. And for bonds, I think it's quite interesting for Chinese bonds because China, you don't really have inflation now. Even though the bond yields are very low, you don't have inflation. And if you have a slightly stronger currency, inflation is not going to be a problem because the stronger currency will help to keep inflation down. So if you are a global investor, I think the Chinese bonds will be interesting because you can earn 1.5% with zero inflation and the expectation that the currency will appreciate. So I think it's going to be a very good risk profile, so low volatility and kind of stable return. I know that a lot of investors, especially institutional investors, are not able or not willing to buy Chinese government bonds. But we also know that there are a lot of investors that once the price starts to improve and things they trade very well, they change their mind and they want to join the new trade.
Right.
So I think these two will be quite interesting. And finally, I think that if you have a slightly stronger RMB, I think it's going to be good for other currencies in general. So we can talk about the partners, let's say Korea and lower dollar in general. Yeah, Brazil. We have our own issues. I think I'm very excited about Brazil in the next couple of years, but this is a chat for another time.
Cool. Thank you so much for sharing your insights with us. I also personally learned a lot, and I think we'll have more discussions down the line. Next time, I will definitely invite you again to share about another issue that I think you have a lot of insights for, which is the China-Brazil relations and how Chinese companies are doing in Brazil right now. Must be very dramatic at this moment. I will die to listen to your insights about that.
Yeah, that will be a
Thank
pleasure.
you.
I think our countries have a very, very good relationships, and I think it's going to be better and better.
Yeah. Thank you. Thank you so much.
Thank you, Robert.
Okay.
It was a pleasure.